Good afternoon, everyone. Welcome to this Art of TradeStation class. The title of today's presentation is Strategize Options Trading with OptionStation Pro. So as the title implies, we're going to take a look at OptionStation Pro and see some of its functionality that is going to help you analyze options and place trades on options and option spreads. So welcome, everyone. Thank you for taking the time out of your schedules to be here and join me in this class. I'm going to do my best to answer everyone's questions. There is a lot of people here connected in class, so there may be a possibility that I may skip your question, but don't feel that I'm ignoring you. We have an email address that you can send questions to about our presentations or our educational content. The email is education@tradestation.com. Just in case, you throw a question at us right here in the chat, and I don't get an opportunity to answer it, because that's the reason why we're here. We want to make sure that the TradeStation platforms and that everyone here can take advantage of the power and all the features that are part of the OptionStation Pro software. Before we get started, the usual disclosures and announcements. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. Keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, that active trading is not suitable for everyone, especially when it comes to trading options which carry a higher degree of risk. Past historical performance is no guarantee of future results. We all need to be aware of that. And we have all the links here for the disclosures. Manolo is going to share that link here in the chat if you want to go there as well. We also have the options disclosure right there at the bottom of this PowerPoint slide. All right, let's go ahead and get started. Welcome, everyone. Let me switch over to, first of all, to our Options Education Center. I'm not sure if you are aware of this, but we are building an Options Education Center where we have articles, we have workspaces, we have videos. So if you haven't been to the Options Education Center, just go to TradeStation.com, and on the Learn menu, you're going to find the Options Education Center as an option in that drop-down menu. Just go there, and in here, the idea is for us to build a library of different articles that are based on different option strategies. We have a couple of strategies as a starting point. We have one on straddles and we have another one on bull call spreads. If you click on any of these articles, for example, let's go ahead and click on straddles for a moment. I'm going to show you some of the things that are here for education, of course. This is an article on straddles and how to take advantage of earnings. You do have the article here. You can just scroll down. You have all this information here. There is a video presentation of the strategy. You also have a PDF of the article for those of you that want to keep a record of these articles on PDF, or if you want to print them out. And there's also a webinar associated with this article, the straddle opportunities for earnings. In addition to the webinar, the video, and the article, if you scroll down on this particular page, you're going to find supporting images and additional videos on how to place that trade on OptionStation Pro or the TradeStation platform. In addition to that video, you have workspaces, you have custom studies. So what I'm trying to say is that come to the Options Education Center, see what's available. We want to make sure that you have education available so that you have different strategies that you can trade and learn. So let's go ahead and switch over to my TradeStation platform and start showing you some of the things that I wanted to highlight on TradeStation's desktop. This is TradeStation desktop. I'm looking at a chart of Tesla. Is one of the examples we're going to take a look at today. OptionStation Pro is integrated into TradeStation. So if you want to access OptionStation Pro, you have to log into TradeStation first. We go to apps, and you're going to find OptionStation Pro as one of the available apps here. Here it is. When I click it, it's going to open up OptionStation Pro. I already have it open, so let me just go switch to it. It opens up as a separate application. So if you're expecting, an OptionStation Pro window to be inside the workspace, it doesn't work that way. It just launches separately, and you'll have like two separate applications on your Windows taskbar. You'll have the TradeStation desktop and you have OptionStation Pro. When OptionStation Pro loads, it's going to load the last symbol that you were looking at. Just thinking or assuming that you're going to continue on your analysis for that symbol. So we load it up for you automatically. However, it's very easy for you to come up here to the top left corner and type in any symbol you want to look at. If you're interested in index options, you can just load up an index like the S&P 500. The symbol for that is $SPX.X. And when you click on it, it's going to load all the options available for the S&P 500. Let me come here to this drop down and go to Tesla. By the way, the search feature up here on the top left, there's technology inside of that box that allows you to type a ticker symbol or also the name of a company. So if you don't really know the name or the ticker symbol for a particular company, you can just go straight in there and type in the name of the corporation and it'll load up for you. At the top of OptionStation Pro, you have information on the underlying. So I see that Tesla is trading at $200.50. This is real-time data. It's connected to the real-time exchanges. So even though I'm connected to a simulator, a trading simulator, the data that I get is live and the data that I get is real. I'm on a simulated environment because I'm going to try to place some trade as examples. And look over here on the right-hand side, the account number starts with the letters SIM. So it's just a quick way for you to double check which environment you're connected to so that you don't, place trades where you shouldn't be placing trades. If you're just learning the functionality, if you're practicing, placing trades, make sure that you are on the simulator so that you're not risking your capital while you're learning the functionality. All right, this is Tesla. I have my option chains. They're grouped by expiration. You can see that it lists all the expirations up until the year 2026. Of course, you have filters up here that allow you to control how much data is being loaded into OptionStation Pro. We have a dedicated filter for strikes. For the default, I think we load 20 strikes. For almost everyone, that's enough strikes to be able to place, trades on options. But if you're looking for, deep in the money or deep out of the money strikes, you may have to increase the number of strikes by just going up here to this drop down. We also have a little bit more comprehensive filter where you can choose how many strikes you want on either side. A lot of times your outlook may be on a certain direction. Maybe you're bullish or bearish. So you want to display more strikes on either side. When you go here to the filter, it allows you to specify how many strikes you want on either side. You can see here that we have the expirations. We have the expiration types. I don't have the quarterlies selected, but if you want to see all the expirations on any underline, I think they're all checked by default. You can go in here and uncheck any if you want to focus on specific terms. If you want to, focus on the weeklies, then just uncheck the ones you don't want to see. And the spread width, this only applies once we're building spreads using the spread selector that's available here on TradeStation. I'll show you how to do that. Let me go ahead and reset this and just get out of the filter. All right. So I did say earlier that we have all the options grouped by expiration. You can see the specific date on which these option groups are going to expire. Inside parentheses, you also see the number of days that remain until the expiration of that option. If you don't see a qualifier, and I mean the word weekly or quarterly, the ones you're looking at with a lighter shade of gray, those are monthly expirations. On the far right, I see implied volatility. Each expiration will have its own calculated implied volatility. And inside parentheses, you see expected move. So at any moment, you can just look at the expected move, and based on the implied volatility of options, we have an estimated expected move on their underlying. So if we look, for example, at the options that are going to expire in April, we can see that the expected move is $32, meaning that Tesla can move up to $232 or can move down to $168, $32 in either direction. So it's an interesting way of looking at where the prices are going to be. And one thing that I wanted to show you too, let me go ahead and expand the number of strikes that are available. I'm going to go here to 20. There we go. So the expected move that you see here on the far right that is included inside parentheses, it's also displayed right here behind the strikes. So that lighter shade of gray that you see on the strikes will tell you what is the probability of Tesla moving in either direction. Sometimes that is useful so that if you're having difficulty choosing a strike, of course, this probability of cone will limit, the strikes that you should trade based on if you want the price of the underlying to be within, that lighter range. If you're looking for the price to be outside of that probability, maybe because you're selling premium or you're selling, you're shorting options, then of course you can use that as well. When you click on any of these options in order to select them to trade, let's suppose that I want to trade this 200 strike and I see on the call side. So I see the pricing over here. I see a bid price and a ask price. In OptionStation Pro, if you hover over the asking price, OptionStation Pro will assume that you want to buy the call. And if you hover over the bid price, it's going to assume that you want to sell the call. Whichever one you click on, that is what's going to be initiated for you, a buying transaction or a selling transaction. With one thing that everyone needs to be aware of is this little drop down on the top right corner of OptionStation Pro. Take a look. It says click to trade. If I go to the drop down, there's two options there. You can trade or analyze trade. Analyze trade, I'm not sure which one is the default because I've been using my OptionStation Pro for some time and I forgot which one shows up first. But just be aware that you can control what happens when you click on the bid or the ask. These are things that it's important because if you leave it on analyze trade, clicking on any of these will send you to the analysis tab. The analysis tab is the second tab right here in OptionStation Pro, and it allows you to see a graph on the position and additional information that we're going to get to in just a moment. All right, let's go ahead and take a look at what this does on the trading side. I'm going to go here to trade. I'm going to buy the 200 strike, or at least, set up the order ticket. As soon as I click on the asking price, that call gets highlighted. You see a blue highlight going across my screen. And the information is also being sent to my trade bar at the bottom of OptionStation Pro. In here, I can still make all sorts of modifications. So even though I clicked on the 200 to trade it, I can come here to this little drop down for strike, and I can choose a different strike. So you can still make modifications. So don't feel that I clicked on this one and then I have to, start from scratch again. Not really. You can make any modifications from the order ticket. However, you can also just click on another one. For example, if I change my mind and I say, well, I really want to trade the 195, just click on the asking price of the 195. And you can see how the leg switches. Now it deselects the 200 and selects the 195. So anytime you want to make a change on the leg that you're highlighting, you can always, click on another one. One thing that I want to point out here within the option chain, which is useful for a lot of traders, is my break even, and also have a clear understanding of where the prices of Tesla need to go in order for my position to make money. In this particular case, you can see that in order for me to be on the profitable side, and I can tell by this vertical line that appears on my strike column, in order for me to be on the green side or the profitable side, I need Tesla to increase in price. You see how the strikes are increasing here. The point at which the red line turns into the green line, that is my break-even price. The break-even price is calculated very easily. It just looks at the strike that you're trading, 195, and it's going to add what that option is going to cost you, which is $19.80. So the break-even price, if I add those two, it's going to be around $214.80. That's where you see that line switching from red to green. Very clear, I can see where my break-even point is. If I wanted to, and this is something really interesting, If I wanted to sell a call to reduce my cost, because if I look at what's happening here, this call costs $19.75 or 85 cents. It's updating in real time. But if I keep in mind that every contract represents 100 shares, I know that this call is going to cost me almost $2,000, 1,980. If I want to reduce the cost of my trade, I can always trade a vertical, which is still a bullish strategy. And I'm talking about a bull call strategy. If I come over here and I hold down my control key and I say that I want to sell the 205, notice what happens. I'm going to click on the bid price because we already said that if you click on the red, you're going to be shorting that call. This is a selling transaction. And I'm holding down my control key because this allows me to build a multi-leg strategy. Very simply, I just hold the control and I can just click on any leg that I want. In this case, since I'm building a vertical, I'm just selecting 2 legs. But if you want to build another strategy like an iron condor, for example, that has 4 different legs, all you need to do is keep on holding that control button and clicking on all the different legs that you want, the calls and the puts. In this case, I'm going to hold down my control key, click on this $14.80. And now I see a blue highlight, which is my long call, and I see a red highlight, which is my short call. Notice what happened to my break-even point. Everybody sees that? The point at which that line switched from red to green, it actually shifted. Now it's closer to 200 than it is to 215. Why? Because, of course, we're getting a credit for that call that we're selling. Now look at the price over here. It's not $19 as it was before. Now it's $4.88. So my break-even point, it's going to be my call strike, which is 195, plus the $4.88, making it $199.88. It reduces my cost. I don't have to spend so much capital on this position. And at the same time, it caps my profits. I mean, that's some of the features of this bull call spread. If you look over here on the order ticket, we have these calculated values that are going to be very helpful when placing the trade. Let me show you what I mean by that. Let me right click on this red leg and remove. This is the way that you remove a leg from your order ticket. Right click on it and remove the leg. If I take a look at my calculated values here, my maximum profit is infinity. That's the symbol of infinity, meaning that, yeah, Tesla can increase in price up to infinity. There's no ceiling. So that's why the maximum profit, there's no specific number, it's just infinity. The maximum loss, though, I'm risking $1,960, of course, because the trade can go in the opposite direction. And this is the premium that I have to pay. Makes a lot of sense, right? Let me go ahead and select this other call here and show you how those values change. Now you can see that my maximum profit is capped. Now I'm not, aiming for infinity. My maximum profit is $518, and my maximum loss is significantly reduced to $482. Those are some of the things that will help you, determine which trade or which strategy I want to trade. Hopefully this makes sense because the functionality is there to help you build these strategies and make sure that you have everything in place so that you can place the proper trade. And here you also have Greeks, you have the delta and you have the theta, which you can take a look at any moment. Let's go ahead and place this trade. The markets are still open. I can place this trade on the simulator. And notice that you have 2 buttons down below, bottom left. You have a natural button and you have a mid button. The mid button is going to calculate the mid price between the bid and the ask. Natural is going to select the actual trading prices, which is 1970 and 1470. It's just going to add them together, the positive and the negative, and calculate what the natural price would be. A natural price, of course, would give you a more likely execution. Let's call it that way. Sometimes if you choose the mid price here is 488, the order may just sit there and not get filled at all until there's somebody that wants to get into that position for you and get you executed. If I click on the natural price, the limit price box gets automatically, filled in, makes it very simple, and I can just place the order. This is my confirmation. My estimated maximum loss is 500 and my profit is 500 as well. Let's go ahead and click on yes.
Order filled.
And you heard my computer, right? I think I selected to share my sound so you could see how, okay, perfect. So I got filled. With the natural pricing, of course, that's where the buyers and the sellers are selling these particular calls. So you get an immediate execution. That's what I meant. Of course, the market can move very quickly. It's happened to me many times where I select the natural pricing and I still have to wait for my order to get filled. Because in a fast moving market, of course, you're clicking natural, but by the time you click on place order, the price may just shift. And now that price is not available anymore. So just be aware of that. Over here on the left-hand side, I see information on my position, which is handy. I see the +1, which is my long call, and I see the -1, which is my short call. As you can see, if I hover over these, it says close. So this is a quick way for me to close any of these legs. If I click on the actual numbers here, it'll try to close that specific leg. It won't close the vertical for me. This is the vertical that I traded. Let's go ahead and take a look at what we can do with that vertical. What we are expecting for the price of Tesla to do is to increase in price. Let's go ahead and take a look before we even, do anything to that order. Let's take a look at some of the things you can do to analyze this position. Let me go and take a look at the Manage tab. The Manage tab is where you're going to see all the orders and all the positions. Right here at the very top, I can see my vertical. I can, click on the plus that's here on the left-hand side, and I can see the details of each one of the legs. Right here at the bottom, I see my equities positions. I see Apple, Hewlett Packard, I see Tesla, and I see X. If I open up Tesla, and by the way, the reason why we have all the equities positions here is that you can see everything in one place. For options traders, that it's very useful. Even if you're just holding shares and not necessarily options, they're going to show up here just to give you an understanding of what you're holding and if you want to trade any options on any of those equities. I think on all of these, I have options. So for Apple, I have a straddle. For Hewlett Packard, I have a vertical. And for X, I also have a vertical. But let me go ahead and collapse those since I'm working with Tesla. And let's go ahead and manage that trade. One of the things that TradeStation allows you to do is manage your open positions in any way you want. You saw that I traded a vertical, but when I come over here to my positions panel, I see two legs. I see a single call with 195 and a short call with 205. If I click on any of these and I drag and drop on top of the other, it'll combine the two legs, allow me to look at the overall profitability of this vertical. You can see that is, it's up $117. And I think the issue with the price has got to do a lot with it. The fact that it got filled at a lower price and that's showing me a profit of $117, that usually doesn't happen so quickly on an option, at least for me, it doesn't happen that quickly. I wish it, but in this case, I traded the vertical and I'm already making $117. Let's go ahead and take a look at the position and what we can do. What I don't want this vertical to do, I don't want it to lose money, of course. What happens if the price of Tesla, instead of going up as we expect, because we traded a vertical, we're expecting the price to go up, it goes down. If our profits are consumed and we don't have the green here anymore, we don't want that to happen. So what we can do is we can set up an activation rule on this vertical so that it gets closed if the price of Tesla drops to a certain level. I'm going to say that price is going to be 195. If the price of Tesla drops below 195, I just want to close my vertical and get out of it. This you can do with any open position you have on your TradeStation. I'm going to show it to you on an options vertical, and you can see how convenient this feature can be. I'm going to right click on my vertical and I'm going to say close this position. When I do that, notice how the trade bar pops up from the bottom of my OptionStation Pro and it populates my legs in the opposite direction. This is a trade to close my vertical. And I'm shooting for a credit of 488. Now, in this particular case, I'm going to shoot for a market order. Why? Because I don't have certainty of where the price of my vertical will be if Tesla drops to 195. So what I can do is set up a market order that closes my trade if the price of Tesla drops to a certain level. So let's go ahead and click on activation rule right here below. Notice that it's part of the trade bar. You click on the little ellipses to get to the settings or the activation rule that you want to set. I'm going to set a price activation and I'm going to look at Tesla, the underline. So I'm going to type in Tesla and I'm going to add it. And I'm looking for Tesla to be below. And I'm just going to type in the price in here, 195. If I click OK, that's all I need to do. And I'm going to click on this button, place order. It says the limit was entered as a debit. However, the last quote indicates that this order should be entered as a credit. Do you wish to continue? I'm going to say yes. This is my vertical. Notice that it has that activation rule right here in the advanced row. It says activation Tesla less than 195. I'm going to say yes. And the order is submitted. Look up here. I have my vertical under the received category. If I open this up, notice that it says market under limit. So it doesn't have any price specification. But if I scroll here to the right-hand side, under advanced, let me go ahead and make some space here. Under advanced, I see my activation rule. This is a conditional order. It's waiting for Tesla to drop below 195. And that's going to be my trigger so that it closes my position at market. What if I wanted to do the opposite? If I want to shoot for a profit target, I'm already making 125. You can see the $125 here. One thing that I can do is right click on this active order and cancel it. Let me cancel it from here. Notice that it moves over to the you are out section. And if I wanted to do a profit target, let's say that I'm going to right click here on the vertical. I'm going to, again, close this position. But I'm going to shoot for a credit here. So I can say if the credit goes up to, let's say, $6, I want to get out. So once I place the order, you can see that that order gets submitted up here. So it's going to monitor the prices of my two calls, the long call and the short call. And whenever the spread is priced at $6, it's going to close it out at a profit. That's the way that you do a profit target on this spread. Okay. Yes, Scott, I see your white. Scott is asking, why didn't I use an activation rule instead of using a limit order? I could have used a limit order for sure, or a stop order. You know, in this case, if I wanted to protect my position from losing, I could have said, yeah, go ahead and set up a stop loss if the credit drops to a certain level. You saw the credit was $4.98, right? You could have said if the credit drops to $3.50 and send it as a stop, you could have done that as well. So there's different ways in which you can manage these positions. And I showed you a couple. You know, you can do an activation rule, or you can do a limit order or a stop order to manage your prices. Let's go ahead and take a look at some other functionality. I did say that I wanted to take a look at this vertical and take a look at some of the profitability. If I right click on the vertical, notice that I can analyze a duplicate. I can analyze the close and I can analyze the duplicate. If I click on analyze duplicate, this will send me to the graph. It'll send me to the analysis tab. Notice that the bottom section is going to show me my simulations and my positions. What does that mean? Well, if you look up here, I have the vertical that I traded and I got filled at, and I got filled on. So this information is up here. But I also selected to analyze that position over into my analysis. So it sent the same information over here to my analysis tab. So this section at the bottom, you can have real positions and you can have simulations. And you can do sort of a sandbox type of thing where you come here and you start adding different positions and see how it would affect your profitability. This graph over here on the very top shows me what the options positions value is at different times before expiration. Let's go ahead and take a look. I'm going to, I notice that you have check boxes here, so I can check any of these just to make sure that I send that information over to my graph. I'm going to collapse my real position because I wanted to analyze this simulated position. One thing that you can do is you can click on the prices at the bottom of my graph and squeeze them. The prices that you see right here at the bottom are the prices of the underlying. That's what it says right there on the axis is an underlying price. Right here on the left-hand side, you have theoretical value, P&L. And you have the zero right here in the middle. That's the break-even point. Anything on this left side is going to be a negative, and everything here on the right-hand side is going to be a positive based on where the lines are drawn. And notice that it's very clear that if the price of the underlying goes down, we are in the negative territory. We want Tesla to go up if we want to be on the profitable side. Of course, you have different values at different times because time is a component to the options value. The more time there is, the more valuable the option is. So in this case, we're looking at three different lines. I want you to take a look at the color because the color is going to represent what each line is. If you look over here on the top right, it gives you a legend of what those lines represent. You have the white, which is now, and it tells you days to expiration 63. You have the cyan line, which is days to expiration 0. That means that that's expiration, the cyan. And the green line is April 7th, 2024, a few weeks before expiration. Now, of course, this can all change. And depending on how long you're holding certain position, you can see the valuation of your P&L at this particular time. Let's suppose, and I'm going to use an example so you can see how interesting this functionality becomes. Let's say that instead of using these April dates, let's say that I plan on closing my position by the end of March. I'm not going to wait until the actual expiration, which is April. So I want to see what the value of my position would be if it's the end of March and Tesla has gone up to $230. It's trading at $200 right now. I am expecting the price to go up. I'm bullish, but I want to do a calculation of how much profit that would represent. Well, first of all, I need to change the date of that green line. You can change the date of any of the lines here, but I'm going to change the date of the green line because it's in between expiration and now. The white line is now, the blue line expirations. I'm going to modify the green line, which is somewhere in the middle. I'm going to come over here to the cogwheel in the top right corner of my OptionStation Pro. I'm going to go to the graph, and I'm going to move the sliders, not for the white, not for the cyan. I'm going to do it for the green. As I move the slider, I'm going to keep an eye on what it says up here. Notice that the green line right now, it says April 7th. I'm going to slide this green slider over to the left until I see the last day of March. Right now it's April 1st, so a little bit more. There we go. March 31st. I'm not sure if March 31st is a trading day. I would have, liked to have checked that before, but that's okay. This is just a theoretical example. Let's say that we're holding the trade until March 31st, and we want to see how much profit we can make if Tesla moves to $230 by that date. I'm going to close out of this. And what I do is I add what's called a price slice. This section between the graph and my positions at the bottom, you can see that this it's called price slices. It allows you to create theoretical scenarios. I'm going to click on this add button. And when I did that, it added information here, but it also created this vertical line on my graph. By default, the very first line is going to be pinned to the last price. And you can see how the price right here on that yellow line is going to match the price of the underline up here. So this is a nice way for you to see where the real-time price of Tesla is in comparison to your vertical spread. In this case, my vertical spread. I can drag this line to any different place. Click and drag, or I can type in the price that I want to analyze. I come here to the price, I type in 230, and notice that it's giving me a theoretical P&L of $250. But wait, this theoretical P&L, it's on the plot of now. So if Tesla would move to $230 today, then my theoretical P&L is $250. But I don't want it today. I want it on March 31st. So what I do, I click on the drop down right here for plot, and I click on the third line. 1 is usually going to be now. 2 is going to be expiration. And 3 is going to be somewhere in between. I click 3. And a good indicator is the color that you see right here in the plot. Notice that it's green, so that it matches my green line. And what is my theoretical P&L? $400. Just to recap, if Tesla were to move to $230 by the end of March, that would represent a move of $400 in this vertical spread. And you can do all sorts of different scenarios here based on this graph. It also helps you see what are the probabilities or what are the chances of your position being inside the probability of profits. What you see here in the gray, so let me squeeze this a little bit more. I'm talking about this gray box that you see behind the graph. That gray box is representing expected move of Tesla based on historical volatility. Of course, based on standard deviations on that movement. So if I look at this little box up here, there's a 2 in there. That means that the probability of movement for Tesla is calculated at 2 standard deviations. What does that mean? It means that there's a 95% probability that Tesla will be within this gray area. That's my probability of movement. So it does help you visualize what are the chances of your position making money or not. Of course, you can modify the standard deviations here. If I drop it to 1, which is the default value that shows up in here, this is a 68% chance of probability of movement. The probability of movement is calculated on historical volatility. You can see that for Tesla is very high at 52%. That can be adjusted because I know somebody's going to ask, okay, how many days of historical trading days are you using for that volatility percentage? If you go here to the cogwheel and you go to the graph, not the graph, I'm sorry, you go to the common tab, you have a setting here for historical volatility bars back. The default is 30 days. So in the past 30 days, Tesla shows a volatility of 52%. But if I adjust this and say, well, I want to calculate it a little bit further back, I'm going to do 90 days instead. I type in 90 and I click on close. And you can see how the historical volatility gets adjusted based on Tesla's movements in the last 90 days. So always keep an eye on that historical volatility. And that's what's going to be used, to determine what are the probabilities of Tesla moving in either direction. Let me go back in there, common, and turn it back to 30. All right. And now, if you want to know what those boundaries are, one thing that you can do is come over here to the plot not to the plot, to the pinned, and notice that we have preset movements of the underlying. So these percentages that you see right here is what would happen if Tesla moved down or up the particular percentage, 5%, 10%, 15%. Those are preset and they're automatically calculated for you in real time based on the movement. And below that, you have the ones that are based on standard deviations. So if I'm looking at one standard deviation movement, I can just click that. And notice that it creates 3 vertical lines on my graph. So I can see that there's a 68% probability that Tesla will be between 172 and 236 based on historical volatility and the one standard deviation calculation. If I were, trading iron condors, for example, let me go ahead and uncheck this. Let me go back here to options. By the way, one thing that I didn't show you is the spread selector. We did talk about selecting, options by holding down the control key. Makes it very simple. You hold down the control key, you click, 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 and you create your spread. If you don't want to do it manually, you can select a spread from the spread selector. In this case, if I do iron condors, for example, notice that it'll pair up the strikes automatically for me at a set distance. I see the 190, 195, 200, and 205. If I wanted to skip prices in between, that's where the spread width comes into play. I did say at the beginning that I just want to show you what this does. If I increase this spread width to 2 and I apply it, notice that it jumps a strike in between. Now I see the 195 and the 205. So it doesn't go to 200, skips a price or strike price in between. So that's what you can do if you wanted to widen the spread, the distance of your strikes. Okay. Now let's say, for example, that I click on this and then I click on, let me analyze this trade. By the way, what I really wanted to do is analyze the trade, but I can do it here. If you go to the trade bar and you said, well, I really wanted to analyze it instead of trading it, you can always click on analyze right here from the trade bar. There's a button there. Let me go ahead and send it to analyze. And then you see the iron condor over here. I'm going to go to options again and then click on another one. Let me click on this one right here and then analyze again. So if I open this up, now maybe this is not such a good example because we don't see the difference. If I look at this, I have the 2 iron condors selected. You can see them right here in the graph. I can pick and choose which one I want to have shown on the graph. But if you plot different strategies on this graph, you can have an understanding of what are your chances. Well, what are the chances of your strategy being in the profitable zone? It's important for options traders to know that. Based on historical volatility, this graph tells you, how far out this security is going to move. So it's important for us to know that information so that we can place a trade that has the best probabilities. I was looking for an iron condor that was probably outside, because if I add another one, let's go ahead and add another one. Let's go really deep out of the money. So let me go here. I could have just looked at the gray area here. I selected 2 iron condors that were still within the probability of movement. If you guys remember, we also have an expected movement here, which is the light gray. But if I choose something really outside and then analyze that here on my graph, let me turn this down a little bit. You can see that 2 of the iron condors are within probability, but there's one that is completely outside of the probability of movement. So the ones on the left have a better chance of being in the profitability zone. So that's some of the things that you can do right here on this graph if you're trying to decide, which options spread it has the better chances of being profitable. Let me go ahead and clear my positions right here at the bottom. I can click on this little button and say delete all simulations. Chuck, I see your question on how to set 0 DTE for plot. You do it exactly the same way. You select an option that expires today. I believe we have, expirations are today, February 16th. And you just plot it the same way. If you click it, you can chart it, and then you can see its probability of movement. Let me go ahead and remove these slices. You can click on the X up here to remove the slices. You can also increase the number of standard deviations. Based on standard deviations, there's a little chance for Tesla to be moving inside of this profitable cone. If you're interested in 0 DTE strategies, we are going to release an article very soon. So I encourage everyone to continue visiting the Options Education Center. I showed it at the beginning of class. I'll show it again here in class. If you go to TradeStation.com, go to Learn, make sure you go to Options Education, and we're going to publish articles on all different option strategies. So if you're interested in learning any of them, just come over here periodically, because we're going to continue to update this page. Let me go ahead and thank you, Manolo, for sharing that link there if you want to bookmark it. Let's go over here to my OptionStation Pro. Let's see how much time we have available. I think we ran out of time. Also, one thing that I didn't mention that I wanted to address here is, because I don't do it in classes that often, but if you go here on the right-hand side, you have this rollout bar that has option statistics. I'm not sure, if anybody here has been using OptionStation Pro for some time and haven't seen that option statistics bar, it does have a lot of useful information, including implied volatility, where the implied volatility is at the moment, what the highest and the lowest volatility has been in the past 52 weeks, and what the median is. So you can compare how the implied volatility today is to how it's been in the past 52 weeks. And that also gives you a implied volatility percentile that you can take a look at over here on the right. We can see that these are on the green, so it is said that Tesla is experiencing low implied volatility in terms of its options pricing. But in here you have, the put-call ratios, you have volume on puts, you have open interest. Since I had to increase my screen resolution, some of the numbers here are cut off, but they should show up properly on your side. You make sure you hover over options statistics and you see this information on the right side. Guys, thank you so much for spending this time for me. Again, make sure that you visit our Options Education Center if you have some time. And we are going to be periodically adding information there. So make it a habit to go there once in a while. So thank you so much for your time. Have a wonderful afternoon. And I look forward to seeing you in one of my future classes. Thank you so much. Wonderful day. Bye-bye.